Hey everyone, it's Joe Friday, and I thought I'd do this quick video on divergences since it's something I use in my trading all the time, and I get a lot of questions about it. A lot of traders really don't understand it, but let me just go through how I use it, and perhaps you'll be able to take something away to help you in your trading with it. All right, so divergences basically mean that the indicator and the price are going in two different directions, and they suggest different things. So you have a regular divergence, which suggests a potential reversal in trend, and you have a hidden divergence, which suggests a potential corrective move. So basically, when you see a hidden divergence, that is suggesting that divergence is really corrective. In other words, if price is pulling back, it's a corrective pullback, and that the prior trend, assuming it was up, would resume, and if it was going down, the prior trend would reverse to go lower. So you can use these divergences. I gave you guys the cheat sheet that you guys can look at and kind of study, and after a while they'll jump out at you. The hiddens are obviously a little harder to detect. You need to really look for them because sometimes they're not as obvious. Hence, why they're called hidden. Well, part of the reason anyway, because people don't understand the meaning of the two different divergences. So, in any way, the point is sometimes they give you good signals that maybe something's awry under the hood. So when you see price rising, but the indicator is going lower, that's a bearish divergence, right? So I mean something's wrong. It's not a signal in and of itself to buy or sell, but it's just a caution flag, and that caution flag, is something I don't trade against. I would rather miss the trade than get in knowing there's a divergence in play that may or may not play out. Most of the time they do play out. Now it's hard to go back in time and look at divergences that were invalidated because clearly they were invalidated and the divergence no longer exists. But we can go back and show the times it did play out, and most of the time they do. I'd say 85%, maybe more, depending on the time frame. And you can use divergences on any time frame. They are more prevalent on the lower time frames than on the higher time frames, like the weekly or the daily or the monthly. And obviously on the lower time frames, they tend to play out a little sooner, a little faster than the daily, weekly, or monthly. So it should be pretty obvious. And you can use the divergences on any indicator you like. Now I don't have my particular indicator here because mine's a kind of specially crafted. It's almost has like Bollinger Band levels on it, but it's basically the same as this 583 MACD with two lines. It's very little difference. The only difference is the oversold and overbought levels on my MACD reflect the Bollinger Bands. These don't. So you can still use this. It's really very little difference. And you can use the standard MACD, or with the histogram and the two lines, or just the histogram, or just the two lines, or you could use an RSI, stochastic, whatever it is you like to use as an indicator. I found, for me personally, the two-line MACD to be the best. But that's just me. Everybody has their own preferences. Like people like the RSI. I really don't have the RSI in my chart because you guys know I use this RSI moving average. So anyway, I'll show you some examples here and then you can see the difference. And then as we go through them, I'll start eliminating some of these indicators from the bottom so you can get a better view of things. So why don't we start with IWM. Let me go down to, let's say, an hour chart. And let's see if we can find some divergences here. I'm doing this right off the bat, no pre-designed plan. And let's see what we can find here. So, okay, so here's one that jumps out at me right away, and that's this move right here. And you can see we have price going higher, but at least on my MACD, it's like an equal. And that's still a divergence. It doesn't have to be higher, doesn't have to be lower. As long as it's equal, but price isn't equal, that's the divergence. So this here is a negative divergence because price is higher. The MACD hasn't made a higher high. So it's basically could have just made a lower high. So you can see that my MACD set up the 583 settings caught this pretty clear. You look at the 12.26.9 setting, doesn't show any divergence. The histogram shows a little bit of a divergence, and I'll have to go in and take that one out. Hang on 1 second. Just to show you. The histogram showed a divergence, but the two-line MACD didn't at 12.26.9. And this showed a negative divergence, so that was helpful. But it's not really even a true divergence because when you use these histograms, you're supposed to go down red and then come back up green. That's a true divergence. Here, you really had just a lower histogram and then it went higher. So it could be a little tricky here with the histogram. So this is why I don't really use the histogram. I prefer the two-line. And if you look here at the RSI really didn't show the divergence because actually it made a higher high, right? And the same here with the stochastic. The only ones that made a divergence or showed a divergence were my 583 MACD and the histogram. But the two-line 1226 MACD showed nothing. So that was really not useful. So let's see what else we could find here. And again, this is just an hour chart. And here's another one here. You can see we have price going up. But we got the MACD going down. So this is telling you that there's something wrong here. When you start seeing price going higher, that should be a caution sign. Here's the MACD again. And you can see the RSI did nothing. A little bit higher actually. And the stochastic this time did show it. But I found the MACD two-line to be the most prevalent. It shows that divergence is a lot, not only more often, but early on. So you can catch the move beforehand instead of waiting with the other indicators that may show it a little later. And for me to show you that, I have to find an example here. Let me see if I could find. Well, you can see this one here is not as it's not as clear, but you can certainly see it. Higher high, lower. MACD also caught it, but again, there was no really dip red like it was like here. See, here you got it, dip red and then green. It just really was green above, so it's a little misleading. The RSI didn't catch it, and either the stochastic because it just was flat. So it wasn't really showing you anything, but this one did, and you saw that once we broke support, the support level here, it broke. And the MACD, this was telling you that was coming, and the signal is the break of support. Not, not so much the cross on the MACD, but the break of support. And that break of support is what? The RSI moving average. So that's how I use that in conjunction with my RSI moving average. And that's why I say sometimes, you have a divergence, potential divergence. It's not confirmed. It doesn't confirm until price breaks, either higher or lower, or whatever direction the divergence is pointing to. Let's see if I can find another one. All right, so here's one here. Now this is a positive divergence because you can see we have a lower price, but you see the MACD was kind of heading higher. Now the MACD showed it, but really this is just a histogram. There's no up and down like it should be, red to green to green. It's not. This is just showing you momentum is increasing to the upside, but that's not the same thing. And the RSI showed nothing, and the stochastic showed nothing. Yet this fast MACD is what I call it, picked it up. So if you were watching and you saw this, you would say, okay, I need to start looking long here or get out of a short. And the level the level to confirm is going to be the breakout, excuse me, the break of the RSI for a long. Now this is an hour chart, and it happens on multiple different time frames. I could probably find a million examples here, but I think you get the gist of it now. Now here's another one, pretty clear. Now this is a positive divergence. You can see lower low on price, MACD, higher low. Now this here is the one instance where you have a true divergence on the MACD histogram because you went from red to green to red, but a lower reading in the red, and that was your positive divergence. You see, RSI showed nothing, and the MACD really showed nothing. There's a little bit of a divergence because you can see it's basically even, but it was so much clearer here, right? You could just, these two examples were perfect. So if you were trading this, you would just wait. You see the MACD cross. That's your first sign. And you could wait for the break of this candle here as a confirmation, because now we've made a higher high. Or you could wait for the break of the RSI moving average and then go long. It really depends on your risk preference. But usually, like I've been pointing out, once you get above this RSI moving average on the 1 hour, it's a bullish indication. So that was a good risk reward to wait for there, but you could have entered here if you wanted to, because you did break this high. See, this is the drop, came back. Once you broke above that level, we pulled back again, but once we solidly broke above it, it was off to the races. Now, another reason I like the RSI moving average as opposed to the other indicators is, as I noted before, you can see the lines cross, right? So here you have a cross here, right here, at 10 o'clock. So if you're watching the MACD and you see the cross, it's like, okay, 10 o'clock is crossing. All right, this is going to confirm. It's giving you a heads up that it's looking to confirm, which means price is going to go higher. The MACD really doesn't confirm until it crosses over the zero line, and that's at 1500. So that's 5 hours later. So again, another reason here, the RSI doesn't have a cross, and the MACD, the stochastic did cross about the same time, but there was no really standout divergence. If you were looking real hard, you would see this is a hidden divergence because it's got a double bottom, even though price made a lower low on IWM on price. Let's see if we can find some more. And sometimes they're more obvious than others. As you become more experienced, you'll get to pick them up, and they just pop out at you. And at the very least, even if it doesn't play out, it's a warning sign that if you are long or short, that you may want to get trim positions or tighten up a stop loss because a reversal may be imminent. So here's another one. You can see clear divergence. You can see the MACD. Boom. This here a little bit, you can see just the red, barely made it, but you can see divergence is there, no doubt. Showed up on the RSI too a little bit, not as clear because you can see it's not that much of stark contrast between the high and the low. And the stochastic here, really just a double bottom. And if you went, just to show you real quick, we just went to use the two-line MACD as opposed to the histogram. You're going to see that there's a difference with that as well. So here was that divergence, and you can see, you can barely see it here, barely see it. So it's not really showing you much, right? And if we go back to some of the other ones we had here, hang on, we can find it. You can see that this actually was a hidden bearish divergence, because you can see the MACD made a lower low. I can't get it in there. Well, whatever. You can see the MACD made a lower low, slightly lower low. If I make this bigger, you'll be able to see it a little better. So this was a hidden bearish bullish divergence, because you can see the MACD made a lower low. I'm sorry, there was no divergence because the MACD made a lower low, as did price. So I thought it was a hidden bearish because it was even, but in any event, it wasn't. So you can see though how this 1226 told you nothing, but the 583 did. So this is why basically I don't use any of these indicators. I only use my MACD. Now let's go to crude, because it works really on any instrument. And let's see what we can find here on crude, if anything. All right, so here you can see we have bearish divergence, because we have higher highs in price and lower high and an even high on the 1226 MACD as opposed to the 583 MACD. Let's get that a little clearer. So the RSI also showed it, but the stochastic actually had a hidden bearish divergence, because you can see, I'm sorry, it didn't have a divergence, because you could see the stochastic made a higher high, as did price. So this is why, again, I kind of don't like these other indicators for the divergences, but some people like them. So it's up to you. If you love the RSI and you think you prefer to use that, that's fine. But I'm just giving you my preference. So let's see what else we have here. Let's see what else we could find. Well, this was a little bit of a bullish divergence here, because you can see price, the lower low, price, excuse me, the RSI, the 583 with a higher low. Even the 1226 showed that. But the difference being the 583, you see the cross here. Once that line's crossed, it suggested price was going to keep going higher. That happened at 1800. Didn't really happen here until 2100, 3 hours later. And again, the signal would have been a break either above that last high candle here, or you wait for a break above the RSI moving average to confirm. And you can see the RSI really didn't show anything, and neither did the stochastic. They were basically double bottoms. So hidden divergences at best. Maybe RSI had a little bit of a divergence. You can see price is slightly higher. But the key is, you want something that's going to be noticeable to you. Not that you have to struggle to find. If you have to struggle to find it, then it's really of limited utility. So when you start seeing these stark type divergences, they just jump out at you. So that's why I prefer to use them. Now here's a bearish one right here. Boom. A few minutes left, a few hours later, the next day, whatever it is, and you can see. There you go. Now this was showing you nothing because you see it making the same higher highest price. RSI may be hidden if you want to call it that because it had a basically even top, and the stochastic also basically an even top. So another showed you a hidden divergence. So again, this is why I prefer my 583. And let's see if we go to, let's go to the Qs, go to NQ, go back a little bit here, let's see what we can find. And again, I can't find the times it's invalidated because obviously there's no divergence anymore, but it happens, but more often than not, you're going to see that they do play out. Timing is always an issue. No way to time it. That's why you just got to wait for that support level to break. So here's another clear example. Higher high in price, and pretty obvious on this one. You can see how much of a lower low it was. So once we broke support, it went down. Now here, you had divergence too, but you really had to watch for it. It wasn't as noticeable as here. RSI, again, very, very little. And the stochastic, really basically nothing. It's just basically hidden at best. So again, this is why this faster MACD works for me anyway. And we can go to different time frame too. We can go up to a 4 hour. Let's see if we can find something on a 4 hour. Well, here you can see a little bit of one. As you can see, we have price here basically even to slightly higher high. But MACD is just not confirming, right? It's not confirming that. It's like waning lower, lower, and then finally support breaks and the thing drops. Not so noticeable on the 1226, the RSI, or stochastic. I mean, you really could notice that if you were watching, and even if you don't see the right side of the screen, you should be able to pick that up once you get used to looking for these type things. So here is from last week. Again, this is the 4 hour. Nothing really here at this point. Maybe you have it here because you can see price made a lower low, but this made a higher low. Didn't really make one on this one, which is unusual, but even here it wasn't really as stark that you would have noticed it. Now they happen, like I said, in all time frames. So if you went to a, let's see, we went to a daily. They just don't happen as often, right? So here you're going to see a positive divergence on this daily on NQ. And the larger the time frame, obviously the bigger the move, right? So here you got the daily. This is the bottom here and the low of 2012. And look at that divergence. I mean, this was just screaming long. And once you broke over that candle, this high here, or even that high if you wanted to wait, you were off to the races, a few hundred points. You can see here, not really as noticeable, slightly higher. Same thing with the RSI, a little bit, and maybe a little more noticeable with the stochastic. But all in all, like I said, I prefer the MACD. And let's see what else we have here. Well, here we have a bearish divergence. You can see that was brewing, brewing, brewing. Finally broke support, kind of chopped around, then we fell. But this divergence here was the sign that you needed to get out of that position if you were long, or at least be cautious. Here you had one also very slight. Same thing with the RSI. Same thing with the stochastic. Maybe the stochastic was a little more visible. But these other two were very, very slight. And let's see what else we got. Here you kind of had a little one. Wasn't that great a sign. This was a better sign here. This move from here to here, as you can see, a little more noticeable. Not so much on any of the other indicators. And the last one we had here was really a decent one back in 2016. Another beauty on the daily. And these are the big moves when you catch them on the daily. So you can see this one here was just barely higher than this one, but look how more noticeable this is. Even the stochastic here wasn't as noticeable, or the RSI. So again, I don't want to beat a dead horse. I'm just trying to show you the differences between the two. And you can use whatever indicator you like. Let's see what else we got here. Well, here was a bearish one. You can see pretty clear here that you have a higher price. MACD, basically flat, right? Double top. So that's a negative divergence. The MACD did not make a higher high like price. So it was telling you there's something amiss. The 1226 didn't tell you nothing. Either did RSI. The slow stochastic, basically almost the same as the 583 MACD. And there's probably a few in here that I may have missed. When you got one here a little bit, you got, not really. All right, so anyway, that's it. That's kind of want to show you. I don't know if the weekly we have any on here. It might be tough to find one on the weekly. Probably have to go back. Well, on the weekly here, what you have is, I think, a nah. Nope, thought you had it hidden, but it went lower. Well, here's one on the weekly. You could see a little clearer, higher high, and then we went down to the lower low on the MACD here to suggest that this was going to come to an end. And then once price broke, we had a nice run lower. So anyway, that's about it. Any questions? You always feel free to contact me, but it's pretty clear, I think, what I was showing you here, so you should be able to understand it. And if you want to just use the settings I use, then you can just, let me just take these off. So now you just have the MACD. And if you go down to, let's just go to a 1 hour. All you need to do is just go to your studies. You bring in the MACD, 2 lines. It's going to come in 12.26.9. You just adjust it, 583. Make your colors whatever you want, the lines, and that's it. You're done. But once you have it on, you'll see it's a lot more clearer without having all the other indicators in there clogging up the screen. Just want to see if I see anything else here. Well, here's one that's pretty clear, right? If you can't see that one, you've got to be blind. Oh, that was telling you this ain't gonna keep going. Then you just waited. This was really support, right? And once that support level broke, so happened to be also the RSI moving average, you had a nice drop. You went from 87.44 down to 85. So it was almost a 250 point drop. So that would have been a nice trade, right? And here is one that's really more like bullish, because you can see we have kind of like a triple bottom here. MACD's going up, telling you something's not right. This is going to turn. And you shouldn't, I mean, the difference between the divergences, whether they're hidden or just regular, for the most part doesn't mean much, other than the fact, both are going to tell you that this is going to be some type of reversal. Whether it's a change of trend or a pullback continuation, doesn't make a difference in the end. The bottom line is you're going to do the opposite of what price is doing. So price is going up and you got a bearish divergence. You either want to exit or you want to start to look for a short, but you got to wait for price to confirm, and you need to find that support level that needs to break, so that you know that that's the level I got to wait to break. Because if you jump in early and the divergence doesn't confirm, you're going to get screwed. You're going to be stuck in a trade. So there's always another trade, so you're better off not missing it. Here's another one here. Again, it's an hour chart, so you get smaller moves, but clearly was telling you something's amiss. And if you waited, not even for the RSI, just really support, right? Sometimes the RSI support, sometimes it's not. Here it is, 95.55, went down to 9,500. So 55 points you would have got. Not bad. Again, it's an hour chart. You're not going to get, 1,000-point moves like you will on a daily or a weekly. And here, obviously, there's other divergence as well, because you can see right here. You got that. And sometimes, you don't have the peak and valley. You just got a straight line basically going down. That's telling you that was going to break. Here, I would have said, oh, this is support right here, just above the RSI. So once that broke, it was a short. This was a huge drop for a 1 hour. But then you knew, once you got down here, you kind of have like triple bottoms, and you see, this MACD is going up, this is going to turn. You just wait. Break of resistance. Boom, you go up here. Now, where to take profits and exit, that's up to you guys. If you would have been looking here, you would have seen this is resistance. So you would have been looking to get out of here. I mean, sure, it could have broke through, but that's your target. And then it pulled back, and then it finally broke through. So again, you guys got to figure your own targets out, but it all comes down to support and resistance. And last but not least, we got one more here. Higher high. Price, really not really. Slightly lower. Confirmed on the break of that candle. Support. So you would have been shorter here at 90, let's say 9,400, and 93.18. So almost 100 points, 90 points. And this was support, right? See? This was support, so that would have been your target. Now, if it kept going, great. I mean, what are you going to do? But your target, so you know, you could bounce is where you'd be looking to exit, or at least tighten up your stops just in case it turned. And it kept going, then you can to write it down. But if you kind of just waited up here, you would have got stopped out on the way back up. All right, guys, that's it. Sorry, I just went a little longer than I thought. Any questions, like I said, you can email me. Hopefully you'll find this useful, and it'll help you with your trading. I suggest pulling up some charts and going back and reviewing past price history. See if you can pick them out yourself, and not only the divergence, but where would you have been? What would have been your target, and what would have been your possible exit if it confirmed? Like, what was the confirmation level? Well, it's the break of support, right? And the support target would have been support down here, for instance, on this one. So obviously you went right through, but you didn't know that. So you'd be trailing or tightening up your stops as price went down. And the same way on the way up. All right, guys, again, I hope you found it helpful. Any questions, always feel free to email. I'll help you any way I can. Take care.